imagine this. The moment comes when a capital call hits your inbox. The siren sounds, a sudden demand for cash. Panic rises, not just in you, but in every limited partner watching this exact scenario unfold worldwide. Why? Because these capital calls, small ripples on their own, can trigger tidal waves of risk that no one dares to openly confront. They don't announce systemic failures. They whisper them in shadows. The question is, are you ready to see what's really happening beneath the surface of your investments? Capital calls aren't just money requests. They are stress tests for the entire financial ecosystem. They squeeze liquidity out of limited partners like you, putting pressure on founders to deliver, pushing funds to scramble for more, and if not managed properly, they thread the needle straight towards systemic collapse. Right now, frustration brews behind closed doors. You, the limited partner, are stuck holding commitments while markets shift violently beneath your feet, and the pressure to respond grows unbearable. Fear settles in because failure to meet capital calls can trigger cascades of forced sales, dragging valuations down and spreading contagion like wildfire. You can feel the gnawing pain that your capital, your trust, isn't just a number. It's the lifeline for entire ecosystems of innovation and growth. Your money moves markets, yet the system treats you like a cog. That's infuriating. But this isn't just about venting. It's about seizing control. You have the power here, but only if you understand the hidden mechanics and take ruthless, unyielding action. Step 1, don't wait to be dragged into chaos. Build liquidity buffers proactively. Don't just hope you can meet capital calls. Strategize cash reserves now to avoid panic sales when everyone else is gasping for air. Step 2, demand transparency like your life depends on it, because it does. Push fund managers for real-time covenants, clear stress test scenarios, and dynamic call schedules. If they resist, question everything. Step 3, fight for capital call flexibility in your agreements. Negotiate clauses that allow you to delay or adjust calls during systemic shocks. These aren't favors, they're survival tools. Step 4, diversify not just by geography or sector, but by structure. Link your capital across vehicles with staggered calls and differing risk profiles. Don't put all your eggs in synchronous baskets primed for simultaneous collapse. The hardest truth? This is a war against hidden fragilities, built on fragile assumptions, illusions we are taught to believe. You cannot afford to see capital calls as routine. They are triggers that expose systemic fragility, a warning siren telling you systemic failure is brewing beneath calm waters. If you don't act, panic will seize the market, and forced liquidity events will turn private rounds into public disasters. But here's the revolutionary part. By mastering capital call risks, limited partners become the architects of a new order. You create a network of resilience. You become the liberated individual wielding capital not as a burden, but as a weapon to shape the future intentionally. So here's the uncompromising call to action. Burn complacency now. Build liquidity buffers that outpace commitments. Rewrite fund contracts to empower you with flexibility and control. Create alliances. Connect fiercely with other limited partners. Share intel. Pool strategies. Don't just sit and get called. Control when, how, and if you respond. Own your capital calls like a founder owns every dollar raised. This is your battlefield, and you are not powerless. The system may lie, but you don't have to be a prisoner of its illusions. Transcend the old rules, master the chaos, and become the force that transforms crisis into opportunity. The time is now. No one else will do this for you.